Greg, you heard Steve's report there. These inflation numbers have been troubling for a lot of investors and a lot of just everyday folks out there. How exactly is the market going to be somewhere these folks can turn to if they're worried that inflation persists?
Yeah, thank you for having me. I think, as pointed out, these inflation numbers are pretty scary, but you have to actually be impressed with the market's ability to digest the inflation numbers. You know, we're only about 1% off of all-time highs. And as you point out, interest rates are moving higher today, but they're still at a pretty low level around 150, which I think we would think that if inflation were reading this hot, we would be much higher than 150. But in terms of finding places to hide within the market, or at least avoid the discussion, I think there are areas like healthcare, and there are also areas where higher prices actually benefits business models, things like Visa.
So Visa, why Visa then? It's a consumer-driven name. Is it the idea that a company like Visa benefits no matter what, so long as there continues to be transactional spending? Is that the reason why?
Yeah, you hit the nail on the head. The consumer has actually never been in a better position. The consumer right now is flush with cash. Unemployment is declining. We saw last Friday's job reports. The U.S. consumer and the worldwide consumer arguably hasn't been positioned this well in a long period of time. And if you're talking about Visa and other companies like MasterCard, you're really just positioned to benefit by things going through the system at a higher price.
So then, if you also mentioned healthcare, what part of healthcare specifically? Is it the insurance side of things? Is it the actual operators of facilities? What is it? Is it drug companies? What exactly is the inflation play there?
I think generally speaking, it's just that healthcare is not a hot button for inflation. It's not materials, it's not financials, it's not energy. And within healthcare, you're not really having quite the labor shortage situations that you're having on the retail side of things. So with healthcare, it's really that you're avoiding the inflation discussion. And also, too, we just happen to think that healthcare has kind of been lost amidst the inflation discussion.
Greg, it's Kelly. A quick final question here as we look at the NASDAQ today in particular. I know you said we're only 1 or 2% from the highs, but do you think there could be a much bigger reset there if bond yields and inflation, if that all proves persistently high?
Absolutely. I mean, the last part of your question was actually the key ingredient was persistently high. Interestingly enough, you would think that these high readings would be doing a lot more damage to the stock market already. And that really speaks to the communication of the last 4 to 6 months, where inflation is not a surprise. We knew we were going to have some scary numbers in Q4, and here now we have them, and we're not reacting with a lot of panic. So the question then becomes, is inflation stay high enough that it does economic damage for next year? And as of yet, stocks are at least pausing and saying, we're not quite sure yet that they do. But on the other side, we look to the Fed to handle it if, in fact, we see higher inflation like your prior guest highlighted.
All right. Greg, we'll leave it there. Thanks so much for your advice today. Greg DiMarzio.